Did you know that some of the India's biggest success stories like Titan or HR Motors were once small cap stocks? Imagine spotting the next multi-bagger stocks before the world catches on. Friends, please note small cap stocks are not just risky penny stocks like 1 rupee stocks or 2 rupee stocks. They are like babies of tomorrow's blue chip companies. Over the last decade, some of the small cap stocks in India have delivered very good returns. Also, India is on the brink of an economic revolution. New industries, new startups, and government policies are fueling the growth of small cap companies. Whether you are a beginner or seasoned investor, cracking the small cap puzzle requires a mix of strategy, patience, and a bit of luck. Let's break it down step by step. In this video, I will explain three important methods to shortlist good potential small cap stocks. I am willing to teach in detail. Are you willing to learn? Before I explain how to shortlist some of the good stocks which can become multi-bagger stocks in small cap stocks, we need to understand what is small cap stocks. So basically, these stocks are divided based on the market capitalization. So first we have large caps. So the top 100 companies, no, this is SEBI definition, not my definition. Okay. So the top 100 companies listed in the stock exchange will consider as large caps. The next, 101 to 250 companies. After 100, the remaining 150 companies considered as mid cap stocks. And the next, for example, the companies in which the market cap is less than 5,000 crore, so it's considered as small cap stocks in India. This is as per SEBI's definition. Okay. So now it's in simple words, anything above 20,000 crores market cap is considered as large cap stocks. Anything between 5,000 crores to 20,000 crore is considered as mid cap stocks. And any stocks less than 5,000 crore is considered as small cap stocks. So now when I say small cap stocks, what are the differences between penny stocks and small cap stocks? Because these penny stocks also comes under small cap stocks, because anything less than 5,000 crore is small cap stocks, right? So even penny stocks also falls under this category. But there is a distinct difference between penny stocks and small cap stocks. So basically, these penny stocks will trade below less than 10 rupees or 20 rupees, and the market, the overall market cap is less than 500 crores. So basically, most of the operators operate in these penny stocks. They push the price on the upside. They create an illusion in the retail crowd that the price will go up to the skyrocket, and they create a false impression, and because of that moment they will encash the benefits. Okay. So whereas small small cap stocks is, overall, and the penny stocks is around 15% among the small cap stocks. The remaining thing are small cap stocks. So we don't deal or we don't invest in penny stocks, because our aim is to find good multi-bagger stocks only in small cap stocks. Now, there are three methods actually. So, one is fundamental screener, which means I use only fundamental parameters to shortlist good multi-bagger stocks in small cap stocks. So, second one is technical funda. So, I use some of the technical concepts as well as the little bit of fundamental concepts to shortlist the stocks. And the third one is sector rotation. Okay. So let's go with one by one. The first one is fundamental screener. So in fundamental screener, basically there are many fundamental concepts like, debt to equity ratio, PE ratio, market cap, profits, net sales, growth, revenue. There are so many parameters. So basically you need to understand how a business work. See, very simple. When you take a business, there are, one thing is, how much big or small the business is, right? That is one first important parameter. And the second important parameter is revenue growth. So whether the revenue is growing every day, every year, or every month, that revenue growth is important. And the third thing is profit, whether the particular business is making a profit or not. And fourth is whether that particular business has a loan. Suppose if there is a very big loan, most of the profit will go towards making the payment towards the loan interest, right? So, and the last one is return on equity. So basically, I've considered the most important parameters in fundamental. I use these parameters to shortlist some of the good stocks in small cap category, which has the potential to become a multi-bagger in the future. Now I will explain these parameters one by one, and then I will explain how to shortlist these stocks in TradingView. Now, the market cap is, this is by definition 500 crore to 5000 crore INR. This is for small cap stocks. Anything less than 500 crore, they go to penny stocks category. So we don't deal with penny stocks category. So we deal with 500 crore to 5000 crore. So for example, so what we can do is, if you go to here in TradingView, so if you can click on stock screener, or you can also drag upside this. So there will be filters like this. So what you can do is, here first, for example, market cap filter, you can use this in financial INR. So either you can select Indian currency or USD currency. Okay, so I suggest to use Indian currency, because if you do the conversion for USD, it may be a little tricky, because you need to use the numbers also. For example, if you go to here, if you go to here, so this is the definition for small cap stock, right? Now, in there are two concepts, right? Indian numbering and international numbering. TradingView supports only international numbering. It doesn't support Indian numbering. Because of that reason, I suggest to avoid converting to USD. For example, India number look like this, right? 1 lakh rupees is this much, 1 crore is 10 million. So this is very widely popular in nation countries like India, Pakistan, Bangladesh, and some other South Asian countries. So whereas international number look like this: million, billion, trillion, quintillion, like that, right? So this is commonly used worldwide, including US, Europe, Australia, UK, etc. Now, it looks like this: 1 million is this much, 1 billion is this much. Now, we need to remember this, because TradingView doesn't support Indian numbering system. It support only international numbering system. So whenever we try to shortlist stocks for 500 crore or 5000 CR, we need to convert into the international numbering system. So basically, it looks like this: 1 million is equal to 10 lakhs, 1 crore is equal to 10 million, 100 crore is equal to 1 billion. So if you get confused, you can take the help of any online converter. There are many converters available on online. Or you can also remember any one thing. For example, I remember 1 million is equal to 10 lakh. So from there, I will take it, I will convert any numbers in my mind, or using a calculator or paper pen. So this is Indian versus international number. So I suggest, converting only the number. Actually, you don't have to convert it to the currency, because it brings in unnecessary confusion. There is no need. So I suggest to convert only the numbers, and then you can use it in TradingView. So basically, we need to shortlist the small cap stock, which means 500 crore to 5000 crore. So 500 crore is approximately 5 billion, in India international number, and 5000 crore is 50 billion. So we can select this financials in INR, and then we can use only the Indian numbering system. There is no need to do the conversion. So what I'm trying to say here is, so don't go for this USD conversion, because it looks little complication. So you can go to use financials in INR. So which means all the numbers will be in INR. Okay, which means INR rupees. Okay, but you have to use the international number. So 500 CR to 5000 CR means 5 billion to 50 billion. For example, the number is like this. Okay, so 500 crore is 5 billion, 5000 CR is 50 billion. So we need to use 5 billion to 50 billion in TradingView in Indian number. So financials are in INR. So I'm going to filters. So what I'm going to do is, market capitalization is 5 billion. I'll change this manually to 5 billion. And then Trillion is not needed. Our is only 50 billion. Okay, I'll make it 50 billion. So when I enter this, so what it does is it shortlist all the stocks which falls under 5 billion to 50 billion market cap in India. So country right now it is selected any. So select India because we are interested to know the only small cap stocks, multi-bagger stocks in India. If you are interested to know in some other country, you can select the same. Okay. So right now it shortlist the stocks in India 5 billion to 50 billion. You can already see there are many stocks it shortlisted around 2651 companies it already shortlisted. Okay. Now the next important parameter is the next important parameter is gross profit, because any business, any company should make profit, right? We are interested to invest only in the companies which are making profit. Okay, there are two types of profit: gross profit and net profit. So basically gross profit is the entire profit. Okay, it shows the core profitability by subtracting the cost of goods from the total revenue. Okay, so either you can pick gross profit or net profit, but net profit will be little lesser compared to the gross profit because that is the number of, it shows after making the remaining payments. Okay, so right now I'm using gross profit which is greater than 15%. So first is market cap 5 billion to 50 billion and gross profit should be greater than 15%. So what I do is I will go to Tradingview. Once again, I will go to filters. I will search for profit. See, gross profit is here. Gross profit is here. So gross profit, what I do is quarterly to yearly growth. Okay. So this is fine. Or you can also quarter to quarterly, you can also check. But this is enough actually. Or you can also go for annual yearly growth. So here it should be above or equal 15%, right? This is the second important criteria. So now immediately it, the filters came down, right? Which means this filter has removed all the companies which are making less than 15% profit, right? 15% gross profit to be specific. So right now it is showing all the stocks which falls under 5 billion to 50 billion market cap and which are making more than 15% gross profit on yearly basis. Okay, so this is one two important parameters. So right now we will add one more parameter like debt to equity ratio. So the debt to equity ratio measures a company's financial leverage by comparing its total debt to shareholders equity. Friends, in any business, even you take a small business like a local bakery or a local hotel, if that person has more debt, more loan, which means he has to pay the interest towards the loan every month, right? Even if we make profits, the majority of the profit goes towards to making the payment of the interest, right? So that is why if a business, any business has less loan, it is better for that business, right? And also it is better for the investors who invest in that company. Okay, so a higher debt to equity ratio indicates the company relies more on debt for financing, which can increase the risk. So at the same time, a lower debt to equity ratio suggests financial stability with more equity funding. So in this case, let's say we'll take a small example. A company XYZ has a total debt of 50 crore rupees and shareholders equity is 100 crore rupees. So in this case, debt to equity ratio is 50 crore divided by 100 crore, which is nothing but 0.5. So which means for every 1 rupee of equity, company has only zero point 0.5 of debt. So any ratio less than, this is a general thumb rule, okay? Any ratio less than zero point 0.5 indicates, moderate to good financial leverage, and any ratio above zero point 0.5, it indicates risky business, okay? Risky debt to equity ratio. So we will try to apply the same in TradingView now. We will go here, we'll go to filters. You can search for debt to equity ratio. See here, you can debt to equity ratio, it should be less than, below, or you can below or equal. So both are fine. It should be below or less than zero point 0.5. Whenever you apply this particular thing, see here, from 1602 it came down to 707, which means it negated all the companies in which debt to equity ratio is more than zero point 0.5. Okay, so in this way we are trying to eliminate the bad companies. First is market cap is 5 billion to 50 billion. Second is uh, the gross profit is more than 15%, and the third is debt to equity ratio is less than zero point 0.5. Okay, so based on these three parameters we have shortlisted some of the imported companies. So we will go one step further now. Return on equity. So return on equity measures a company's ability to generate profit from its shareholders equity. Okay, it is calculated by dividing the net income by shareholders equity and express the efficiency of a company in using investors funds to generate earnings. A higher ROI indicates better financial performance and effective management of the equity capital. That's very important. Okay, so this is a simple example. Okay, a ABC company in Indian market, net income is 20 crore rupees, shareholders equity is 100 crore rupees. So in this case, ROI is 20 divided by 100, measured in terms of, expressed in terms of percentage is 20%. So any, in this case ABC is generating 20% return on equity. Okay, so it should be minimum 15%. uh, if it has 15%, if it is ROI is greater than 15%, it indicates a better returns for the equity holders. So these are the important parameters in fundamental screener. So market cap should be this, 500 crore to 5000 crore, or 5 billion to 50 billion. Gross profit is above 15%. Debt to equity ratio is less than 0.5%. Return on equity is greater than 50%. Now observe very, very carefully. I will apply ROE in this case. That is the only one pending. So return on equity is pending. It should be above or equal 15%. Whenever I apply this, it the total companies will come down actually. Okay, see here, only 257 companies it shortlisted now. So if you go to filters, market capitalization is, this is for the small caps, ROE is greater than 15%. Gross profit should be greater than 15%. Debt to equity ratio is this much. Okay, so now it is showing 257 companies. You can also further shortlist these stocks by varying these parameter. For example, if you reduce this point 0.3, for example, from point 0.5 to point 0.3, it will come down. See, similarly, if you reduce something, for example, let's say you wanted to return on equity should be 25, it will further shortlist the stock. See, now we have only 85. Okay, in this way, you can vary these important parameters to shortlist some of the good stocks in uh, in small cap category. For example, these are some of the stocks. For example, let's check any good company. If you go to filters, I will change back to the normal settings. This is the this is an average setting. Okay, so don't think it is a rule or mandatory rule to shortlist the stocks. It is just a generic idea, because if you take any business, less debt, good profit, and good return for the equity holders is a good idea for a business, right? So based on the same concept, I'm shortlisting stocks based on this. Now, if you go here, for example, there is a company called as Thyrocare. So Thyrocare is a very good company. According to this, you can also check, or you can also cross verify these parameters in screener as well. For example, if you go to Thyrocare in screener, say it shows debt to equity ratio is 0.04, which means this company has very, very less debt, which is very, very good. ROI is 13.3%. So this is decent, okay. But if you go for 15%, which is very very good, but even the ROE 13.3% is good, and market cap is it less than 5,000 CR, right? So this is how it appears actually. So now you can also look for any other company. For example, right now, based on our parameters, it listed 215 matches, right? You can check any companies. For example, you can also check this grew well. Okay, you can also check these parameters in screener if just to cross check, or you can also go for this, say Indraprastha Medical. So see, right now the Nifty is falling, right now the Nifty is falling, but look at the performance of this particular company. So it is doing very very well, right? See, it is also showing the breakout in this falling market. Now this company is doing very very well. Imagine if the Nifty starts going up. Okay, I'll show you the Nifty as well. Okay, so Nifty is right now, it is falling, right? It is in the downtrend. So in this downtrend also, this Indraprastha Medico is doing very very good, right? It is showing the breakout actually. Imagine what would have happened if the Nifty and general market is also supporting this move. It will go up like anything, right? So similarly, if you check Infa, so this is also doing pretty well compared to Nifty. You can also check Heritage Food. So this is also doing okay. Uh, Jamna Auto, this is not doing good compared to Indian the current market condition. So in this way, you can check all the parameters, then only you can take a call. See, for example, this appears to be a no, the market movement is not really good in this particular stock, so you can avoid these kind of stocks. So in this way, you can shortlist the stocks before investing. Okay, so this is one way using the fundamental screeners. So next, what I do is I will introduce another screener, Techno Funda screener, to shortlist the stocks. So basically, Techno Funda means it combines both technical analysis and fundamental analysis, offering an interesting and holistic approach to identify potential multi-bagger stocks. Okay, so basically what fundamental analysis does is it helps to evaluate the long term financial health, growth prospects and valuation of a company, but technical analysis identifies optimal entry and exit point based on the market trends and price movement, right? So that is the reason I'm combining the idea of technical as well as fundamental analysis. So now by merging both, investors can identify fundamentally strong companies that are also gaining good momentum in the market. So basically the rules are quite similar. Technofunda market cap should be between 500 crore to 5,000 crore, which means 5 billion to 50 billion in the international numbering system. And then average volume of last 10 days should be greater than 1 million. So when you do this, it shows that these companies are picking the volume in last 10 days, which means some of the big shots or FIIs are big shots, big investors are investing in this company, which means they know something very good, right? So this is one important parameter. And return on equity, I always stress this because ultimately it comes to return on equity, how much return I'm getting for my equity. That is very very important. I always insist return on equity should be greater than 15%. And I use one interesting technical indicator which is called as EMA. So in which EMA 5 should be greater than EMA 50. So basically what EMA 5 is, it is the average of last 5 days. Similarly, EMA 50 is the average of last 50 days. Now whenever the average, the 5 period moving average is greater than 50 period moving average, indicates it is picking up the momentum. So basically I'm picking the small cap stocks category. I'm restricting my search to the small cap stocks category, and then I'm also checking the volume is picking up in the last 10 days. That is very important. I'm also fundamentally I'm using return on equity should be, I'm looking at only the profitable companies. I'm also looking the momentum from price perspective. Volume perspective is fine, fundamentally it is strong, but I'm also looking price is also going up, because let's say you will invest now, the movement starts after 6 months, that's boring, right? Quite boring. So that is the reason I'm also included EMA 5 should be above EMA 50. So in this way we will shortlist. For example, what I do is I will go to screeners. Right now I'll clear everything. So once again, market cap should be 5 billion to 50 billion. So I use 5 billion to 50 billion. So this is the basic fundamental rule, market cap. And the next is average volume of last 10 days should be greater than 1 million. So what I do is, instead of searching, I'll search here volume. See, average volume of last 30, 10, 30, 60, it is there. We are interested only in last 10 days. So average volume of last 10 days should be greater than 1 million. So what I do is I'll make it 1 million. So let it be anything, maximum it's okay. See, right now if you check, we got 128 matches already, which means, so these are all the small cap stocks in which last 10 days volume is more than 1 million. Okay, so we will include two more parameters. This is done, this is done. Return on equity is greater than 15%. So what we do is, again we'll go to filters, we'll type return on equity. It should be greater than, above or equal 15. Okay, so when you do this, it will shortlist the companies further. We got only 21 matches now. Next is, the next important parameter is EMA should be, EMA 5 should be greater than EMA 50. So what we can do is we can go to filters. So right now, these three parameters have applied: market cap, average volume, and ROI is greater than 15. We can also apply the volume part. Okay. So if you go to volume, I mean the moving part, moving average part, if you go to EMA, so basically what I'm trying to say is 5 EMA should be above 50 EMA. So this is EMA 5. So it should be above or equal. Okay, above or equal. Above is fine. Above, instead of value we will search again exponential moving average 50. Okay, so when you apply this, basically what it does is it will shortlist the stocks, the first three settings, and then in which the 5 EMA is more than above 50 EMA. Okay, see, it immediately reduced the number of stocks actually. So these are all some of the potential good stocks. See, for example, if you check this, see, even in the falling market, this company is doing good. For example, if you check this, see, in falling market, it is sideways. So when the general market is falling, if a company is displaying sideways, means it indicates a strength actually. Okay, when the market starts going up, when the general market starts going up, definitely it has a higher potential to go upside further. Okay, you can check any other companies. For example, this, see, this is also doing okay. You can check this. This is, not much activity, you can avoid this. So in this way you can, there are only 10 stocks. Okay, in this way, I mean, you can change the settings. For example, you can reduce the volume from 1 million to 0.5 million. If you do this, you will get more stock actually. Okay, so if you reduce, for example, 500k, then you will get more stocks. From 10 to it got to 21, right? So in this way you can check. You can also see the few last 10 days, you can see the big volume spike. So it indicates the big shots are interested in this category. So in this way you can shortlist a potential multi-bagger uh, stocks under small cap stocks, and you can go for long term investment, friends. So a small caution, friends, don't assume whenever you follow these rules, if you pick a stock, it will become a multi-bagger for sure. There is no concept or there is no thing which works 100% in stock market, because anything can happen in market at any point of time. So you need to remember this, and because of this you should follow the diversification. Let's say if you have 10 lakh rupees, don't invest all the 10 lakh rupees in one stock. Okay, you need to do the diversification. That is very, very important. So after the diversification, you should have a stop loss point. For example, let's say you have invested in this company at somewhere 83 rupees. You should have a stop loss point. You should not hold the stock if it comes to zero. Okay, you should not hold until it falls to zero. You should hold this. For example, this previous swing low is this. You can hold the stock for 77 rupees as stop loss. If it closes below 77 rupees on any particular trading day, you can exit the stock. So in this way, you should always have a stop loss in your mind, and you should apply that particular stop loss in in trading. Actually, you should execute it. Okay, so this is one techno fund analysis. I hope this explanation, these two screeners to shortlist potential multi-bagger stocks and small cap stocks, is really, really helpful, friends. If you have any questions, please drop an email to indrajit.s@gmail.com. I will try to reply whenever I get some time. I hope this video is really helpful, friends. If yes, please like the content, subscribe to my channel, and share this video with your friends. Thank you. See you in the next video. Until then, tata, bye bye, see you.